You've got a lot of finance folks that maybe otherwise wouldn't have gone to the Bitcoin conference, 5, 6, 7 years ago. And you got a lot of politicians and kind of people within the political realm that are going to the Bitcoin conference as well. And so I think that really the Bitcoin conference today is Bitcoin is just maturing. It's kind of growing up, which is a good sign for Bitcoin. It means that Bitcoin is being adopted by these new people, new cohorts, larger pools of capital, etc. And so naturally, Bitcoin's price is up. Now, I do think, though, that there's also this belief that Bitcoin has gone from a contrarian asset to a consensus asset. And part of that, you can see it with Wall Street now embracing it. But I think that's always a really important part. Everyone knows that, doing something different in investing is really important, and being right is really important, right? If you do something different, but you're wrong, then you're just a dummy. You're just wrong and you lose money. But if you do something different and you're right, that's where potential returns can be. But another part of that equation that usually gets left out of the conversation is you need an idea to go from contrarian to consensus, because you need everyone else to eventually see what you saw early. And I think that's really what Bitcoiners are experiencing now, is when you were buying Bitcoin, 5 years ago, 10 years ago, it starts to spread among individuals. On top of that, you then get the media starting to write articles or do interviews or podcasts or whatever. So now you've got individual word of mouth spreading, you've got the media megaphones propagating the message on a broader basis, and then you have things like institutions or others who are saying, hey, the trade is working. And so they start to get this confirmatory kind of feedback from the market. And so they say, oh, I bought a little bit, it's working. Good investors, they press their winners hardest, right? So they're going to go put more capital into the trade. And so I think that when you look at those three things, it really is the price is the marketing campaign. Now, of course, the way I usually describe this is as price is going up, more people are coming in. Naturally, more capital is coming in that's leaving, so it's pushing the price further. Then we, at some point, will get overvalued, right? Or the price will go up too much. And so when that occurs, what will happen is the price will start to try to correct. It'll try to find some equilibrium. Now, some people will have bought Bitcoin on the way up. They'll have learned about Bitcoin. They'll become kind of these hard. I saw the gentleman who's doing this. I think his name's James Wynn. I do not have the stomach nor the cojones to be out there with hundreds of millions of dollars of leverage, $1 billion, whatever, some crazy number. Obviously, that magnifies moves in an asset. And so if you're long and with a lot of leverage and it goes up, then great, you're going to make money. The same is true on the other side. And so I think it is, a very risky game. It's not a game I play. But hey, if that's your game, maybe you've got an edge or some sort of competitive advantage, knock yourself out, right? People should be free to do what they want with their money. With that said, I've been loosely following. I think he was up at one point, like on a P&L basis, like $85 million. That's life-changing money for pretty much almost anyone in the world. And he, couldn't get away from the table. And so I think he's back down closer to like flat on his P&L. Now, again, if that's your game and you're used to wild swings, go talk to somebody who goes to Vegas. I'm like, I had some epic runs and I had some, absolute heaters that ended in sorrow. But on a net basis, I'm up or something like that, right? Here, I don't know what the rest of his P&L looks like. I don't know what other trade.
Like, I have to buy Bitcoin because it still is a contrarian idea for most people and for most institutions. So there is a tipping point there, right? If it goes on another 20-year bull run where we're up another 1,000,000% over the next 20 years, people are, is that the new benchmark? And when is that seen as the new benchmark versus, traditional called ETFs, S&P, VOO?
Well, let's flip this a little bit and talk about. All I know is I'm a pretty simple guy. If you have an asset that is highly volatile and in history multiple times has drawn down 80-85% and there's leverage involved, at some point over the next 3 to 4 years, dead bodies are going to float to the water, right? They're going to float to the top of the water there. Who is it going to be? I don't know. Somebody smarter than me will figure that out. How is it going to happen? I don't know. Somebody that's smarter than me is going to figure it out. But what I do know is if you are going to do this, you better do it with a minimal amount of leverage, because that is ultimately the safe way to do it. Now, of course, it's like anything. If I tell you, hey, we can earn 5%, somebody else shows up and say, hey, we can earn 6%. Somebody else says, I can earn 10, I can earn 15, I can earn 20. Where's the line? We don't know. Companies basically just get chewed up and spit out. And let's see what happens with these Bitcoin companies. But right now, The market's very excited, and they think that this is a strategy that is going to deliver at least short-term shareholder returns. And so far, they haven't been wrong.
Correct. Let's talk about public markets. And I think a big driver of the volatility that we have seen is obviously what's going on with the government today, both with DOGE and just kind of like, what are they thinking about? Are we just going to keep printing money, or is there no balanced budget and we're just going to continue to print and asset prices will continue to go up over a long period of time? Is that kind of what your consensus is?
Well, let's take a step back here for a second, right? So I think there's a lot of folks who were very excited about the current administration going into the White House. Now, if you remember, I called out throughout the entire campaign season over and over and over and over and over and over again that it was a shame that neither candidate was promising to balance the budget. And I said to myself, it used to be during my adult lifetime, you pretended. I promise I'm gonna, balance the budget. The words you want to use, that was what was happening there. But they also got fought by the media at every single step. And so what we had a part of the equation or part of the conversation that did not have the American people's best interest at heart. Instead, what they said was anything that our political opponent does, we are going to fight back against. And whether people like it or not, the media is very left-leaning, right? There are certainly pockets where people are kind of fair and balanced, or they are, kind of not on either side. One of the terms that I hear reporters use a lot is they call balls and strikes, kind of like an umpire. Some of them do that. A lot of them don't, right? So there's some good ones, obviously. There's plenty that are just like mouthpieces for left-leaning causes, parties, etc.
Right-leaning as well, too, right?
There's some, but definitely the media skews to the left. I think that's kind of an objective fact. We look at donations, we look at coverage, all this kind of stuff. So again, it's important to have both. I think you want left-leaning, you want right-leaning, you actually want independent, you want kind of a full slate, you want to give people choice, you want to inform people, whatever. Look at the tariffs, right? I'm calling it right now. There's a line in the sand. We change strategies, right, as a country. I don't agree with changing the strategy. I don't like it, but that's what just happened. And so now I'm going from telling you that tariffs are deflationary, which inflation fell off a cliff since December of last year because of all the tariff stuff. Everyone was worried about this economic slowdown, all this stuff. I'm telling you right now, we're going to regime change, and now we're going the other direction. Inflation is going to come back, and it's because they're going to print money. Milton Friedman, famous economist, great guy. What's he say? Inflation is only created in one place, Washington, D.C. If they print money, that leads to inflation. They're going to print a lot of money. Spending bill, hey, party's back on, baby, right?
That's something that everyone in government can agree on.
Hell yeah. Listen, if they put a bill in front of you that says we're going to give X, but they're voting no, knowing it ain't going to matter, because most people, they're going to take the incentive, right? And so they're going to vote for the bill. And so you got government spending coming. You got the money printer. You hear things like running the economy hot. That's code for money printing. And so what you're going to see here is you're going to see that. And so ultimately it concludes with one simple thing. We're going to go back to this only intelligence test that matters for people in their financial life. Are you a saver or are you an investor? If you're an investor, you're going to be a winner. If you're a saver, you're going to be a loser. Look, I just shoot straight, as blunt as I can put it. If you are sitting there, which something like 50% of Americans are sitting there with no investment assets, and you have 100% of your wealth in dollars, you're going to get crushed. I don't want you to get crushed. You don't want to get crushed. I wish the system wasn't built this way. I wish that incentives weren't in place. I wish they weren't going to print money. Everything we can talk about. It ain't going to change the fact that you're going to get crushed if you're sitting with 100% of your wealth sitting in dollars. And that's sad on the internet saying, get a recession. People talk about the Great Depression, all this nonsense. You ever seen the meme where that guy stands up in church by himself and he's like the lone voice? And I kept saying all-time highs before the end of the year. Get a cigar ready. We going when that thing hits new all-time highs, right? I'm gonna hit you with the security guard shrug from the Michael Jordan documentary, right? Like I told you, like what do you guys want, right? The faster it falls, the faster it recovers. They're gonna print money. They're never gonna let us get in a recession, and here we go.
I mean, the correlation between M2 money supply and, Bitcoin and pretty much every asset across the board for investors is a positive correlation. We could say that.
If there's more money chasing the same number of goods, well, guess what happens? If there's more money chasing whatever your time frame is, then why buy it for 5 minutes, right? All these different things. It just goes back to like timeless investing principles do not change. You can take those timeless investing principles if you are smart, take the time to learn them, implement them, etc., to new industries. But the timeless investing principles, they're timeless for a reason. And so I think that that's a huge piece of this is if you think that you're the next Warren Buffett or George Soros or Steve Cohen or whatever, well, one, odds, just given the probability, you're not, right? But somebody is, right? Okay, well, take the things to learn from these people and apply it in new areas, right? There's a reason why they've been successful. Don't just, I always laugh when I hear people be like, oh, they're dumb. Like, well, objectively, they're not dumb, right? Actually, they're objectively smart. You may not like what they do. You may think that you can do something better or different or whatever, but learn from them and then make it your own. I think that's a huge piece of this is people want to operate in a black and white world, but like the gray area is, can you explain to someone why was Warren Buffett successful? Why was Steve Cohen successful? Why was Paul Tudor Jones or Stanley Druckenmiller? Just go through all.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.